Well, let's talk now to Vicky Pryce, the international economist. Good to see you, Vicky. Happy New Year. Welcome back to the programme. So if you consider the euro as something that's tied together economies operating perhaps at different speeds, is the euro an experiment that has worked?
It seems to have done. Happy New Year to you too, by the way. So thank you very much. Indeed, I mean, the interesting thing is you just had this clip from Greece. What we find is that across Europe, including in Greece, the support for the euro is at the highest it's been on record. So it survived from that point of view, despite, of course, its ups and downs, as we've been hearing. There's no doubt that during the Eurozone crisis, there were huge question marks about whether various countries would be able to carry on being part of the euro and also the future of the euro itself. But it has expanded from 11 members to now 20. It now accounts for a very large part of Europe. We're talking about 340, 350 million people, which is pretty substantial. And also a very substantial part of international trade is now denominated in the euro, about 20%. So it's the second, in fact, reserve currency after the US dollar. So you could say from that point of view, it has endured, but it has had to have a number of changes because it learned a lot from the Eurozone crisis. It wasn't perfect. It still isn't, frankly. Quite a lot more needs to be done, but it had to rethink its institutions. It had to rethink the role of the European Central Bank. It had to rethink the way in which it supported countries. It dealt Greece and others, it dealt with them anyway in a very harsh way. And that has now been relaxed quite significantly. The one other aspect of the whole panoply, if you like, of what it was using, which is the Stability and Growth Pact, which was limiting countries to 3% deficit to GDP ratio and 60% debt to GDP ratio, which many countries couldn't keep, was in fact something like, perhaps around the throats of various countries, which was strangling them in a way. And that's been abandoned for the time being, although it will come in a different form. So they had to learn. Particularly, I think, the role of the European Central Bank as a single regulator for the bigger banks was a very, very significant step forward.
And you said there that you think more needs to be done to improve the euro. What do you think does need to be done?
We still don't have a proper banking union. For example, one small thing, which perhaps matters quite a lot for individuals, is the fact that there isn't a common deposit insurance scheme across Europe, across the Eurozone. Each country does its own thing, even though they tend to have the same figure that they guarantee. But nevertheless, it means that if there is a real problem, then there isn't going to be support from other countries coming in to support what may be happening in one particular area within the Eurozone. So that's one. We still don't have a capital markets union. That would make such a big difference in terms of raising funds and also lowering costs of doing business, frankly, and enterprises being able to fund what it is that they want to do in terms of expansion. We don't have that. We have different regulations still in the pensions industry. So we are a long way from the whole region, if you like, the whole Eurozone region being a single market from a financial point of view. You have it in terms of movements of goods, movements of services more generally, although obviously the financial sector is part of that. It's not perfect by any means, as I was saying. People can move around, of course, very easily, but you still haven't established capital movements as easily as you'd like it. But by eliminating the exchange rate risk, of course, you've come a lot closer to having a proper single market than would otherwise be the case with the existence of the euro.